Hey, William, it's Finance Friday.
Hey, Stephanie, let's go.
I'm so happy for these Finance Fridays because I love how we talk about how we can build our finance and our wealth and our communities
Yep,
and just, help our future generations. So I'm super
exactly.
excited about that. The last time we said that we're going to discuss cryptocurrency. Can you tell me what I need to know about cryptocurrency? I know it's a lot been going on with cryptocurrency and I'm still in the dark about it.
Yeah, you and everybody else. So let's roll back to 2008. All right.
Hmm.
In the US, at least, there was a financial crisis, people losing home values, bad loans, blah, blah, blah. Out of that was born, out of frustration, basically, was born an alternative financial system. People were going to go, we don't need the banks. We're going to do our own thing. So this thing called Bitcoin was created. Now there's this underlying technology behind it called the blockchain, which I'm not going to get too much into, but it basically allows parties that are unknown to each other to exchange information securely so that I can say, I gave you $5. And everybody in the world can look at that transaction and say, yep, William gave Stephanie $5. Okay. That's the underlying technology. And you'll hear people talk about blockchain. That's the underlying thing. Cryptocurrency is essentially a way to say, okay, now that we have this trusted way of exchanging information, let's invent a new currency. Well, how does that work? You can't just poof say, okay, this piece of metal here is now worth $1 million.
Right.
You got to get other people to agree that that piece of metal is worth $1 million. So the Bitcoin was essentially a way to create this scarce resource, the Bitcoin itself, and attribute value to it. And that was done through, you actually have to do work to create these coins. And therefore
Is
people
that
said, well,
mining? Is that when people
mining,
say they're mining? Okay.
exactly. And the mining was an effect of supporting this blockchain, this communications network. And it essentially said, hey, miners, if you will run your computer and try to figure out this hash number, we will reward you by giving you a coin. So the miners initially were getting coins for solving this math problem, essentially, and then signing blocks saying, yes, Stephanie gave William $5. So that's how coins were initially created. Now I could just go out
Okay.
on the open market and buy coins. The miners get all the coins initially. And then I can come along and say, I don't want to do any mining. How about I just give you $5 and you give me one of your coins? And they can go, yeah, okay, right?
Okay. Mm-hmm.
By doing that, you have now set the value of the coin to be $5
$5.
per
Right.
coin. Well, just roll that forward a few years, 15 years, and there's only so many coins. So instead of $5, now the coin's worth $100 because they're rare. So either you can mine the coins yourself, which is really hard, or you can just kind of go into an open market and try to buy some using US dollars. So it's an exchange. Okay, great. Now, people are very enthusiastic. We're like, yeah, Bitcoin's the new currency, blah, blah, blah. Well, you can't walk into a supermarket and buy groceries using
With
Bitcoin.
Bitcoin. Right.
The transaction cost alone would be hundreds of dollars. So you're not going to do that. But it does turn out that Bitcoin is a good store of value, just like gold is. So a lot of people are saying, well, instead of buying physical gold, buy Bitcoin instead because it's digital, it's easier to handle. You don't have to worry about actual gold bars that someone can come and steal. So this is just a better gold. Okay.
Okay.
So
Digital
that's
gold.
Bitcoin. And we've talked previously about asset classes, and we
Right.
mentioned gold. We said, oh, it's something that people say has value, therefore it has value, it has lasting value. Bitcoin has kind of taken up that same space where, it's been quite a few years now and it hasn't gone to zero. So it's a good retention of value, therefore it is an asset class. And you could think of it just like you think of gold. It's like, well, instead of buying $10,000 worth of gold, I'm going to buy $10,000 worth of Bitcoin. I'm just going to hold on to it forever. In 20 years, it'll still be worth $10,000 or no, or more. So that's how you can think of Bitcoin, and very specifically Bitcoin. All right. Whew. Now, along the way, cryptocurrency in general, everyone wants to get in on the bandwagon. So there's a lot of things that try to replicate what Bitcoin was doing because they saw instant riches and, you know, darn the banks, we'll do our own currencies. So what you had was a number, hundreds, if not thousands, of what we call altcoins. Now, these are just efforts that you and I could have sat down over the weekend and said, we're going to come up with Stephanie coin. And we're going to try to convince people to give us money to get Stephanie coin.
Stephanie coin. That's right.
Yeah. So it's like, okay, as long as you can convince someone to give you money, your coin has value. You hype it up, you sell it into the world, you say, hey, this is going to be used to exchange hair inserts, or whatever. There's something behind it where it's like, if you get this coin, you'll be able to exchange it for something else of value in the future. So this is called greater fool theory, right? As long as you can get someone behind you who's a greater fool than you to give you more money, you're going to make money off of your coin. So this over the last, during the pandemic especially, a lot of coins came along because a lot of people were sitting at home with all this excess cash. And they're like, I want to get rich. I want to get rich quick. So some was in Bitcoin, but there's all these other ones that came along, in particular Doge. And I'll show you some current price information on these things. There's Dogecoin. There's Solana, there's Cardano, there's Algorand, there's just all sorts of coins. And a lot of these are just fly-by-night projects where someone would come along, create a coin, put it out there, get you to buy into it, and then yank, they pull the rug, they take the money, and they're gone, right? And you're left with nothing.
They're left with nothing.
You're left with nothing.
But that's why I'm trying to see what's the best thing. Like if I want to invest in Bitcoin, what's the best way of cryptocurrency? What's the best way to go?
The only one is Bitcoin. There's no other. I mean, it's like saying if I want to invest in an asset class, should I get gold or should I, or even better, you have to differentiate between investing and gambling. Getting Bitcoin is an investment. You're actually trying to get an asset class like real estate or gold or Bitcoin, right? It's an asset class. Everything else, almost without fail, is just gambling. It's pure speculation. You're walking to the casino. There's a cashier, and they have cash, and then there's the rest of the floor, the baccarat tables, the roulette wheels. That's all the other coins. You can go take your hard-earned cash and put it on the roulette wheel. 21 black. You're probably going to lose your money. The house always wins. So putting your money on anything other than Bitcoin, you're just gambling. You're hoping that greater fools will come along, make your thing go up, and then you'll dump it when you can sell out at a higher price.
Okay.
So you can do that. You may get rich, you may not. That time is kind of gone because all that excess money that was in the system is kind of dried up.
Yeah.
So you don't have $1,000 laying around to just throw at some random thing. It's like, nah, you got to be a little bit more judicious about your money. So if you're going to invest in cryptocurrencies, you're just going to buy Bitcoin and that's it. There's nothing else. Right?
No problem.
Yeah. I mean, we could talk about things like Ethereum, and that's really the difference between gold and silver. Gold is what you really want, and that's Bitcoin. Silver also does well over time, and that's Ethereum. So it's gold and silver. You can invest in either one. They're probably going to do fine. But investing in pyrite, iron, lead, all these other things, like, nah. If you're going to invest in a commodity metal, invest in gold, and that's it. Don't worry about everything else. It's not worth the effort. So that's Bitcoin. Do you want to see some numbers just for comparison?
Sure. Yeah, let's see it.
So if you're curious about cryptocurrencies, and I'm going to have to share a website here. If you're curious about cryptocurrencies, let's see. I want to share this. This is a site called CoinGecko.com.
Okay.
And it shows you prices relative to the US dollar, right? So right here at the top, Bitcoin, one coin is currently
163.
63,000 US dollars. Okay. Now keep in mind, during the height of the pandemic, the height of Bitcoinness over the last few years, this went up to 60,000. And then it crashed like crazy in 2022. It was down to 17,000 just last year, right?
Wow.
2023. So if you had bought Bitcoin in 2020, in the beginning of 2023, you could have gotten a single coin for $17,000, and it would currently be worth $63,000.
$1,000 now.
Right? And there's reasons for that, and macroeconomic things are going on, and things are going on with the structure of the Bitcoin network and all the rest. This price will probably continue to go up. It may not be as meteoric as going from 17 to 63, but it's probably not going to crash again for some time, because it's not driven by the hype cycle like it was before. There's just plain old people putting their money in there because it's like, well, better Bitcoin than this other currency that's going through inflation. And you see up here, Ethereum at 3,000 per coin. This was pretty low a year ago. Then there's this one down here, Doge, number 10. This is currently 15 cents per coin. This one is mostly hyped by Elon Musk. If it wasn't for him, this one wouldn't even be on the chart. But here it is. What you're looking for is not the absolute number here. What you're looking for is the percentage change relative to the US dollar.
Okay.
Or the percentage change relative to Bitcoin. So you might look at, let's say, XRP here. Okay, it's currently at 50 cents. It doesn't really matter what the price is. It's kind of like stock prices. You can buy a fraction of a coin, so it doesn't really matter what the price actually is. What you really care about is the relative change to other things. So if XRP is going up against Bitcoin, forget about the dollar. If XRP is going up versus Bitcoin, then you'd want to shift out of Bitcoin and into XRP, right? Because it's going up relative. Even if its price relative to the dollar doesn't change. It's like, well, it's all about exchanges. I'm trading you seashells for salt.
Right.
I don't care what the US dollar is. I'm exchanging seashells for salt. If I wanted to buy something that was only denominated in dollars, then I care what it is, the relative price to dollars is. But until that time, seashells and salt is good enough. So you just care about how these numbers are relative to each other. And everything you care about is it's relative to Bitcoin. Now, when you see a big number like this, 63,000, what it's really telling you, and this is the same with gold, what it's telling you is the purchasing power of the US dollar is decreasing relative to whatever this is. And you see the same thing in gold. Gold is currently at 2,400, let's say, per ounce. Well, that's up 50% over the last 5 years. That means that the US dollar has decreased in purchasing power relative to other things over those 5 years. It's not because gold is more valuable. It's like, well, let's imagine gold stayed the same, but the US dollar sank.
Yeah.
Therefore, it takes more US dollars to buy the same amount of gold because the purchasing power decreased. That's what these numbers mean to us.
Cool.
So there you go. You got the Bitcoin and the cryptocurrency, and then there's other ancillary things like, well, what about NFTs? And what about this? And what about that? It's like, it's all gambling. It's all gambling. You got the picture?
Yeah. I got the picture. Invest in Bitcoin. Done.
Yeah, if you're going to go with the cryptocurrency route, invest in Bitcoin. It's pretty much the same as buying gold. but
Pretty
it's
much.
digital instead of physical. That's the difference, right?
Okay.
And so I have a question for you.
Yes.
Last time we talked, I was like, all right, you just got to go out there and set up your Fidelity account and let's start trading. Did you do it?
Yes, I did. I opened my Fidelity account and I started trading. I started with simple recommended. My portfolio is very simple.
Well, let's start with what were you trying to, let's say, what was your investment thesis? What are you trying to do with your money? Are you trying to strike it rich today, or are you looking for longer term? What are you trying to
More
do?
long-term investment. So that's
Yeah.
basically the goal. Long-term investment, and I want to keep it simple.
So we talked about a portfolio of things for you, and we were saying, okay, stocks that are steady,
Right.
companies that are steady,
Right.
companies that are paying out
Dividends.
dividends,
Exactly.
things like that. Because if you're looking at a 10-year horizon, dividends start to add up. It may only be like I don't know, $100 a share, $200 a share. But if you take those dividends and reinvest them and buy more of that company's stock, next time around, you're going to have more
More shares.
shares and you'll get more
Right.
dividends, right? So what did you do? What's on your list?
I invested in Apple, Amazon, Coca-Cola, Pepsi, Microsoft, Procter and Gamble, and Waste Management. And another one I'm going to invest in next week is SPAC, which is the Fidelity Government Mutual Fund.
Yeah, so it sounds like you got enough of the high tech ones such that it's like, well, tech is still the booming thing,
Yes.
so let me get in on that.
Definitely invested in tech.
But waste management, Procter and Gamble is like, no matter what happens in the world, people still need their garbage to be taken out. People are still going to buy Coke. People are still going to buy toilet
Yes.
paper.
Yes.
So those stocks are solid. They're going to deliver dividends. They're not going anywhere. And there you go. And you're concerned with, and we've talked about it before, we're concerned about not the absolute price of the things because you can buy fractional
Right. Fractional
shares.
shares.
So you don't care what the value of the stock is. What you care about is the amount of dividend and the percentage increase in equity, right? So even if you bought a stock for $100, if it goes up by $10, it's 10%. Just like, which is better than a stock you bought $1,000 going up by $10 because it's a lesser percent, right?
Exactly.
So you just care about the percentages. You don't care about the absolute dollar amounts. So how hard was this experience for you?
It was relatively simple. I had a few little snafus and I had to call Fidelity and they helped me, they walked me through it. But once we got over that hump, exchanging, buying, that was easy. I have to find it here, what my dividend view is. So initially my account total is 16K and it's now 17.5 in 1 month.
So just in a couple weeks, you already made $1,000.
Yes.
All right. Well, that's better than making nothing.
Yes.
And all you had to do is put some money down on some key things. Yeah, and there you go. I mean, that might be all you make for the whole year, but it's more than zero.
It's more.
And it's not negative. Don't panic, don't
Yes,
sell,
you
right?
made that clear.
Because stocks go up and down. I mean, I might be down, 6,000, 60,000 one day and up 20,000 the next, you never know. But you don't need to sell because this is investment money. It's not money that you need to buy groceries. So, well, there you go.
There you go.
Sounds like, so what advice would you give the people listening to this Finance Friday?
Yeah, they could do it. You could do it. All you need is a few dollars to transfer. The transferring is very simple. It's very easy. Fidelity can help you do that. And get started. What's stopping you? You're going to spend the money anyway, probably on something else. So spend it into your future.
Yeah, and even if it's just a couple $100 a month, $100, it doesn't matter what the amount is. Whatever amount you can possibly do, it's best if you set aside like every month I'm going to do $100 regardless, And if you do more, great. But it just like the discipline of I'm going to put $100 a month in there and I'm going to invest it in this way. there you go. After a year, you have $1,200.
Exactly.
So,
To invest in.
all right.
Excelente.
Well,
So we do this again
there
next
you go.
Friday?
Let's do it. I think there's a lot of current news that's having an effect in various finance markets that I want to get to. So yeah, let's do it again.
All right. Thank you, William, for Finance Friday.